All right, welcome to one of the first videos in the Renegade Forex Smart Money Concepts trading course. And in this video, we're going to do an introduction to market structure. And we're going to start off with how to actually map candles and candle closure. So we're going to do a break of structure video, and then we're also going to talk about candle closure and how to actually map that on your charts. And so candle closure is actually very simple. All we need to know is that if the candle actually closes above an old high or low, and we'll get into, if you're a new trader, we'll get into actually mapping highs and lows and everything later on in the course. But right now, we're just going to talk about the actual candles on the chart and what they mean in terms of highs or lows. And so this is a very foundational part of smart money concepts and mapping it structure. And so essentially, what we need to know is the difference between a candle and a candle closing and an actual wick of a candle. And so as you can see here, we have a slight pullback in price and a continuation. And at this high right here, we can see that price in that it only actually wicked that old high. It did not actually close above it. And so by actually closing above it, what we would mean is that the body of this candle trades above the wick on this previous high, and then actually the price actually closes above the um, above the old high. And so at this point in time, it was just a wick. And usually when wicks happen, price is actually getting ready to reverse, or it's just a liquidity grab, which we'll get into later on in the course. So don't get too overwhelmed right now. We're just talking about the actual candle body closure. And so at this point in time, when price wicked, you can see it actually comes back down and does actually break. So this is a great break of structure example here, where a candle actually did close below an old high. And so that would actually be considered a break of structure. So at this point in time, when price actually does trade below it and the body of this candle closes below this previous low, this now becomes a break of structure. And that's how we map our structure. So it's pretty simple, really. There's not really a lot more to cover. I'll just run through a few examples in the course just to kind of familiarize you with how to actually map the structure. And so essentially all we need to know, just always keep in the back of your mind, if price wicks something. So here's actually a great spot to start off, and we'll just run through some examples. So price actually, if you look back to this area here, runs down, retraces, and then it just wicks at this point in time. Okay, so if you're watching a live chart, and you're expecting price to go lower, this is not actually a break of structure right here. Okay, now if you look a few candles forward, you can see that price does actually trade through that low, and it does close below it, causing a break of structure. Okay, and at this point in time, price then retraces and comes up and actually breaks structure again above here. And so this candle is actually a break of structure because the body trades through this old high and closes above this old high, causing an actual break of structure. At which point price retraces back down, and we can see this low right here. It does wick below it. So that's not actually a candle closure, that's just a wick. And you can note that by the body piercing down below it. So at some point in time, this actually was a full candle down here, but at the actual candle closure, price retraces back up and closes above that. So this would be what we also call a liquidity grab, which we'll get into later on in the course and go a lot more in depth into that. So don't let that term overwhelm you, but this is just a wick. And so the wicks, which we'll go over more in depth later on in the fractal change of character. But the wicks means something substantially different than an actual break of structure. And so that's all this course is, or this lesson is actually about, is talking about how to actually mark a candle versus a wick break. And so, yeah, let's just keep on going through a few examples. So you can see right here, price did actually pause and pull back and continue. And this continuation right here is actually a candle closure above this old high. So this is actually a break of structure because price clearly traded all the way through this, and this body actually closed up here above this old high, which indicates a break of structure. So like the first example in the opening of the video, price retraces, trades back up, and it does not actually close above this old high. It just wicks it. and comes back around, drops down and breaks structure below here, at which point in time it retraces back up and then continues this little downtrend here and breaks structure again at this candle. So nothing here in any of these candles is actually a break of structure until we have this candle actually piercing down below this low and closing below that low. So at this point in time, this would be another break of structure. Price pulls back and continues this little downtrend here, where at this point in time, at this candle piercing below this low and closing below that, we actually have another break of structure. And so this is a great point here. There's actually two more examples, which I'll leave, which I'll go through and then leave this video here, because it's as simple as that. Price either trades above something, above or below an old high and closes, or it wicks an old high and or low and does not close. And so at this point in time right here, let's see, this might have actually created a little equal low. Let's look at this low here. So the low was 389 on that candle, and the low is 389 on this candle. So if you were watching price live and you were zoomed all the way in here and you saw this candle come back, trade up, and then go back down, that's not anything, because no wick and no candle went below that low. That's just an equal low. Okay, so you have to really pay attention. And at this point in time, price actually traded through that and closed below it, causing a break of structure. And so then at this point in time, going forward, we can see price did actually wick this low and then turned around and then broke this structure up here for basically a reversal, and it did actually break in this candle, and it continues that trend that way. So at this point in time, you don't need to worry about these swing highs and swing lows. The main point of this course of this lesson is to show you the difference between a candle body close and a wick. And then we're going to add and build upon these concepts as we go on through the course. So I'll leave that there. It's really just as simple as that. A candle body closing or a candle wicking above an old previous high or low is how we will continue to map structure throughout the course.